Hi guys, welcome to the Market Code Breakers. My name is Leon and I break down one asset for you every single day, giving you key areas and levels for you to pay attention to going into tomorrow's session. So, oil, yesterday, oil played out absolutely beautifully, as predicted. The levels that I said you will get a reaction from, you got a reaction from them with some beautiful precision. So, first of all, I want to start by breaking down what I said to you yesterday and how you could have traded that today in oil. It was the move of the day. It was a fantastic long that you could have taken based on all the information that I gave you in yesterday's video. Also, I wanted to highlight, I've been talking about the NASDAQ in yesterday's video and in Sunday's video, where I talked about this incomplete range. And I said when they complete that range, they will likely break higher up into new higher ranges. That is what's happened. So that would have been your swing trade logic to take the swing trade long on the assumption that that was going to happen. That has now happened. We're going into a very murky area right now. We've got the elections and we've got FOMC coming up. But don't let that take away from the precision and the beauty of these ranges. They still move price in the same way. However, they just tend to move it a little bit quicker than you'd expect them to sometimes. So let's get into what happened with oil. So this is the chart, and we'll take from yesterday when the market opened, which was around this area right here. This is when the market opened yesterday. And I said to you, there's a few key areas to pay attention to going into tomorrow's session. And I got you to mark off this blue range. And I said they can react from the top of this blue range. They can react from the midpoint. They can react from the lows of this range. This might be very important. And it was superbly important because, as you can see, they reacted from the highs of it as predicted. And then they rushed up. And I said, the next point where you're likely to get a good reaction from on these charts was at this point here, which was the 72.56 area. And you could have taken it, you could have either taken the long from that, which would have given you a nice 130 ticks, which is on oil. That is a phenomenal trade. And in the opposite direction, if you'd have took the short, you would have had to take profit really here, which would have given you 75 ticks. But if you wanted to just see if there was anything extra left in the move, you could have netted yourself nearly 115 ticks on the short based on what I said to you yesterday. So great turnout for oil. So first of all, I want to talk to you about the NASDAQ before I break down what I expect to see from the the S&P going into tomorrow's session. So, forgive me, here we go. This is the one. So I spoke to you in the previous video. Let me put this on the 5-minute time frame so you can see. I spoke to you in the previous video about this range being incomplete. Let me just delete this yellow box. I spoke to you in the previous video about this red range being incomplete, and I said to you this is how they communicate price. When they come back up into this region, they will usually rip right through it and go up into higher regions. So we got that breakthrough. They came back down. They retested it from above as confirmation. They also confirmed this green range, which I kept talking about. I kept talking about in the videos. Look how precisely they touched the top of that green range. That's the signal that they didn't want to play that green range anymore. They broke free of that green range. They confirmed from above that they're now actually done with that range for the time being. Things could change tomorrow. We have FOMC coming up, and we've also got the election. So a lot of things could happen going into tomorrow's session. But as predicted, they broke free of this red range, and now they're working higher ranges above. So I'm not going to break down anything further for the NASDAQ, but I'm just saying that everything that I said would happen so far has happened. Oil, back to oil a minute. I just want to quickly just give a brief overview of, what we can expect going into tomorrow on oil, just to follow on from yesterday. So obviously now we've got confirmation that this red range is definitely in play. We've had touches from the bottom, we've had a touch from the midpoint. Potentially what you might get in Asia is you might get a run to this bottom, you might get another touch, a rejection of this blue range. So it's definitely key now to mark off this whole red range, which starts at 73.31 and the low end of 71.80. You get your Fibonacci tool, and I'll show you how to set this. So your settings, you would have it set to 0, 0.5 and 1. This will give you the bottom, the middle and the top. You click extend ranges right, and you make the background, you just highlight the background so it follows through, just so you can clearly see later down the line the ranges that they're working in. So those are the areas for you to mark off with going into tomorrow's session. Obviously, you need to keep these lower ranges on because they could become important. If price breaks below this, we might get another reaction in this area. We could even break back into this yellow range, react from this midpoint here at the 71.08 zone. There's a lot that could happen, but I'm fully expecting this red range is now to come into play. So the midpoint is crucial, the lows is crucial, and also the highs are crucial. Those are the three areas there you might get some decent behavior. If we get up to the highs and they want to break free of the highs, then what you will likely see, if their intention is to break free of that range and go up into higher ranges, then you'll likely see price break above it. You'll see a retrace to it. You'll get some confirmation with some wick touches in this area on the 1 minute chart. I highly recommend if you're using these ranges to use 1 minute chart, you get a lot more information from that, and then you'll see price continue up. So when price breaks free of this red range, that's what you're expecting to see. We might get more confirmation with touches of the low, and then that red range comes into play in tomorrow's session. So that's something to pay attention to going into tomorrow's session on oil. And now I want to break down the ES for you guys. And as you can see, we've got some vital information to portray with the ES. So I was talking about the ES to Kyle, who's also a market code breaker, and he took the long on the ES. And I said to him, based on what I'm seeing, this blue range, this would be in the highs, this being the lows, and this being the midpoint. Based on what I'm seeing here, where the price broke into, they hit the midpoint, they come back down to the lows of this range. I said to him, I'm fully expecting of them to complete this range by the end of the session. And this was around 8 o'clock, something or other, when I made that call to him. Let me just see if I can get Discord. See if I can get the message with Discord. Oh, forgive me, that's just the so Kyle, yeah. So here we go. So I think you're right, but they played a bigger overlapping range that they will likely fill before the end of the session. Whether they do or not, there's that saying, don't be a for a tick. You only need part of it. You got most of it. It's a job well done. Okay, so I put note the two circles. They are confirming they played the bigger blue range. There was potential for more of the move before close, but that doesn't matter. I'm just sharing it with you. So I'm just highlighting him the importance of paying attention when they're confirming that they're playing a range. They will confirm it with instances like this, where they will break above it, they'll go to the midpoint, they'll react from the bottom. They'll give you all these types of confirmations. They are confirming that that is the range that they are playing with on that day. So with that being said, I was fully expecting of them to complete that range by the close. They actually waited until the end of close to complete that range. But they have moved up. Excuse me. I apologize. So they have completed that range and they have moved up now into higher ranges. And as you can see, they've reached this purple midpoint. So this is the next range that this is the range I want you to highlight going into tomorrow's session, because I think this is going to be very important. Now, don't get it twisted. We've got the FOMC coming up. So what you might just get, you might get a reaction from the lows. You might get a reaction from the midpoint in the Asia session. They might not even want to reach the highs, and they might shift back down into these lower ranges. Okay, but to go forward into the ES tomorrow, I want you to mark off this range. So I want the high, you to mark off the high at 5830, and the lows of this range at 5812. Okay, those are important ranges for tomorrow. Now, in the shorter time frame, which is what you kind of get in here, there's another range which you'd have to make a different color for the purpose of keeping things more visible. I use different colors for different ranges, and they can play multiple ranges at once. So it's very vital. It's important that you're aware of the ranges that they could be playing, and you're taking trades based on that logic, because like I showed you, they confirm which ranges that they are playing, and they usually fulfill the business in them ranges in the given session. Unless they do things like this, where they reach the midpoint, and then they come, that's a signal that they're going to come back for that at a later date. These are your swing trade opportunities where price will move aggressively way to the downside. They've shown you that they've got intentions of these ranges up above, but they haven't completed them. You'd be loading up your longs, fully expecting of when they come and complete those ranges, the same thing that they did on the NASDAQ this week. They'll break through them and they'll move up into higher ranges. So that could be what's building, but we can't assume that's what's building until we actually see proof of that. So the proof of that would be them breaking down into lower ranges after leaving this range incomplete. Another proof would be Asia or London coming up to this midpoint and then reacting from it. There is a key area here. There's another yellow range, which is a much bigger range that takes price higher up. So that's a potential point of reversals in the S&P going into tomorrow's session. So if that was to happen, then that could be a setup either for FOMC, where FOMC could bring it back up and then we could break through this purple range and absolutely rip it up into the yellow range and maybe even ranges above. Or it could be a setup going into next week where they could use the FMC as an excuse to move price down. They've already shown their intentions in these ranges. They will bring it back up into these ranges and then complete them next week. So those are the key areas that I want to take away. So did I talk about the red range? The highs of the red range, 5827. The lows being 5817. Pay attention to that because that might give you some shorter time frame little scalps going into the Asia session. You know, you might be able to scalp from the lows to the midpoint, back to the lows. Key areas to take away. Obviously, this much bigger blue range that we played, the highs of this blue range may also be very important. So it's make sure you've got that marked off at the 5815 because price could wake its way down into this region. 5815 to 5812, you might get a reaction at those points, which might be the signal that they're done with those lower ranges for the time being and they want to keep moving price up. So you get a reaction in that area and price potentially, then that could be the trade of the day if that happens, because that might signal that they want to keep moving up for the day's session. So I think that's given you enough information to go forward for the ES. And yeah, so I just break down exactly the trade setups that I've given you so far this week. For the NASDAQ, I was talking about a rejection in this area, which was the short of the day on Monday. You could have rolled that out for most of the day and price just basically kept going down. Yes, we had some retraces, but your entry wouldn't have been challenged at all. So you was good for holding that until the close of play, which would have netted you, if you held it till the close of play, that would have netted you at the close around 500 ticks. At the best possible point, it would have netted you 800 ticks. So that was Monday's setups. I mean, I'm not giving these as setups. Don't get it twisted, guys. I'm not trying to provide you with setups. I'm trying to provide you with key areas and key levels that the banks and institutions use that you can work with going into the day after session. Okay, so the precision that you get with these is unparamount. People think this sort of precision doesn't exist, but it does when you've got the right information. And that's the thing. A lot of people are working with wrong information, bad information. They don't believe precision exists. They believe the markets are random. There is nothing random when you have the right ranges that the banks and institutions are using. And you will see that there is nothing random. Even when if they get close to completing a range, and then the day after you will see Asia has taken out the New York high. But when you've got access to these ranges and you're seeing, no, all they've done is completed a range that New York didn't actually finalize. There's nothing random. Like you see that, they're taking out the stops, taking out people's stops, New York stops. They're trying to go hunting for the stops. They're not hunting for stops. They're just completing ranges that they've left unfinished business in. They communicate to each other via these ranges. They're not trying to communicate with you, but you can dissect their communication when you understand these ranges. They're trying to communicate to each other what their intentions are. So that's what I'm trying to bring to you. I'm trying to decode the signals, and I'm trying to break that down for you in a way that you can understand it and you can use those levels in your trading in the day after session. So that's the breakdown for ES today, guys. I hope you've taken out some key areas that will take you forward into tomorrow's session. And yeah, and I hope you subscribe to the channel if you like what you see. I give you some of the best. I give you the best information that the market has, because this is the truth of the market. Like, I'm not trying to be no guru. I don't set these ranges. This is just how they are moving the market. So when you see them act so beautifully and precise for yourself, then there's no more explanation needed. I don't need to prove it, because it's what they're doing. The proof is in the precision every single day. So yeah, pay attention to these levels that I give out, guys, because they will benefit you going into the next session. Bye for now.